I went from probably 3 to 5 leads a week. Today, we do like 100 leads a week or something.
Meet Brandon Hall, an accountant who quit one of the largest accounting firms in the world to start his own 8-figure remote accounting firm with close to 90 employees now globally. In this episode, we're gonna cover Brandon's secret method into how he acquired his first few clients.
The client acquisition in the early days was just
how content creation plays a huge role for service businesses everywhere.
I think it's huge. If your goal is to build a $5 million book of business, you should be out there on social media as often as possible. People buy from people and not companies, especially in professional services. You're buying from the people that you know, like, and trust.
And why content creation is almost the same thing as meeting someone in person.
Partners, the senior managers that are up for partner, they would go to networking events and they would try to bring those relationships into the firm so they could build them for the services. This is the same thing. It's just the distribution is ginormous.
Why Brandon thinks non-accountants acquiring accounting firms is actually a great idea and will positively impact the market.
I think non-accountants coming into the accounting industry is actually a good thing. I think that it's going to force accountants to learn how to run real businesses.
How Brandon develops his employees to become top performers in his 8-figure accounting firm.
A lot of accountants are not very good leaders. For our firm, we've been 100% remote since day one. The problem with remote work in accounting firms is they don't know how to run remote teams. And if they fix that problem, I promise you the remote thing would work.
I want to go back into, okay, you start your career, similar to me, you went the Big Four route, got, I would say kind of like the traditional route, go get your CPA, go Big Four. What prompted you to leave and go kick off, a venture of, hey, I'm going to get into this and go do it myself?
There were a few things. I mean, it was like a cascading effect. I had always kind of been a little entrepreneurial growing up. And when I say a little, I mean very little, but at least I tried different things. Like I had like a little mulching business and a little lawn mowing business, tried to sell t-shirts in college. So I was always like trying to think of ideas and test ideas. And when I graduated college in 2013. I'm 34 years old. And that fall, I was sitting in my cubicle. I was working for PwC. I was sitting in my cubicle. I was probably 3 months into my career, and it just like hit me like a freight train. Like, this is just not for me. Like, I can't do this for the rest of my life. Like, it's just not who I am. It's not how I'm built. I have issues with people that tell me what to do, and just can't do it. My sister's the exact opposite. They're both in the Air Force, and I'm like, I don't know how you guys, like, I hear about their drama, and I'm like, that would drive me insane. But to each their own. But I was 3 months in, and I was like, this is not me. Corporate, life forever and ever. It's not who I want to be. So I went on this whole project to find my passion. And I remember there was a 200-page slide deck that I found that was awesome. It was so great. And I can't find it anymore because I try to I always try to give that to people, but I don't know where it is anymore. Buried somewhere out there on the web. But I found this slide deck and it helped me kind of narrow in what I like. And through that process, it was like, hey, maybe you should try to run a business. And that idea was just way beyond me. My parents were both engineers. They W-2'd their whole life. So running a business, even though I had a little bit of very minor experiences with it growing up, I didn't think that you could actually make real money and replace your job. And I was at PwC. It's the top firm, right?
Yeah.
Or PwC and Deloitte, they're always fighting each other, right? So it's the top firm. Why would I leave that to go start something? So I kind of kept that in the back of my head, and I found rental real estate as a way to generate cash flow and replace your income. And through that process, I found Bigger Pockets. So I went on this quest to try to buy my own property, which I did buy, and I still have today. It's a phenomenal property. But I, through that process, was on Bigger Pockets, learning how to invest in real estate myself. And I saw a lot of people asking tax questions. And at the time I was studying for my CPA exam, I think it was the reg portion that I was studying for. So I was just like, I'm just going to try to answer people's tax questions. And I would do a ton of research. So I would take whatever their question was and I would go do a ton of research and bought a couple books, and then realized I really loved helping people. There was this positive feedback loop that I was getting every hour on the forums, because you would post an answer then people would be like, oh, thank you so much, that was so helpful.
Yeah.
And I never got any feedback at my job. So this became my thing. Like I just like gravitated towards it. I wasn't making any money from it, but it was just so much fun helping people get clarity on their taxes. And that snowballed into what I have today. So eventually people started reaching out. I wasn't doing anything, any marketing, anything. All I was doing is just answering people's questions on this forum. People started reaching out, asking if I was taking on clients. And that's where it all started connecting for me. I was like, oh wait, I can make a business out of this. I can potentially replace my income. I can travel the world, like in like serve clients as long as I have a Wi-Fi connection. That sounds way better than being in this cube. So I did that, and I've since traveled zero. but my team's traveled a lot. We have a lot of people on our team that travel around the world while they work, which is really cool. But that's how it all started. So it just snowballed from answering questions on a forum, and then it was just, how do I add another marketing channel? How do I add another marketing channel? How do I add another marketing channel? And here we are today.
It's fun. We have somewhat, I would say similar experiences, probably some similar personalities too. Because I think similar to you, I'm like, gosh, I hate being told what to do. And it's funny, actually, I played baseball in college, and I had actually committed to the Air Force Academy. So that was actually, I was actually almost going to the academy. So I always think back, I'm like, man, I wonder what my life would look like now had I taken that path. Another thing that we have in common too is certainly real estate investing. It was one of my ways into kind of really understanding entrepreneurship and even just like capital markets, right? Probably. And so how big is your portfolio today?
I have 25 units. I have
Okay.
10 duplexes that my wife and I partnered up with my parents on.
Okay.
And then I've got a 3-unit property, a single family home, and a beach rental, short-term rental.
Nice. Okay. Awesome. So one thing that I find, and kind of part of the journey that I went on too, is and what you touched on, is kind of like that crossover between when you're getting out of, we'll call it your corporate job, your W-2, and when you're starting this, your entrepreneurial journey. There's not really like this clean cutoff, right? Like I know for me, it was really kind of like a side hustle, right? It was kind of like this little thing that you're kind of building up until you get to that point where you're like, okay, I can finally see it, and it's come to fruition. It's like right there. I can taste this. And now I just need to spend a little bit more time on it. I've got the courage to be able to rip the Band-Aid off and go do this on my own, right? If for anybody that's listening to this, that they're in that phase, right? And I had some experience in managing we'll call it the employer to going out on your own relationship. What was that like for you? Like, did anybody know, like when you were at, PwC or anything, like, hey, I'm kind of answering these questions online, or, I might be taking on a client here or there. I mean, what was that like, and how did you manage it with your employer?
Yeah, there were a few people that knew, and I was leveraging for advice. So there were like contractors that PwC was leveraging, and so they were effectively like selling their own time to PwC, kind of running a business. So I would ask them a bunch of questions, and but aside from that, nobody really knew. I kind of just kept it on the DL, and I checked all the handbooks and stuff to make sure that I was in compliance with their rules, and I was. But that was I didn't really ask for permission. I just kind of went and did it. So I would take lunch breaks by myself, and I would just go down and bang out calls. I would wake up at like 4 a.m. in the morning and work on the business, and then right when I got home, that's all I would do until I went to sleep. I mean, it was like probably 4 a.m. wake up to 9 p.m. go to sleep, work nonstop to try to build this thing on the side as I was also doing my day job. The nice thing about what I was doing at the Big Four was that it was pretty steady hours. It was like 40 to 45 hours a week, and they wouldn't let you work more than that because the government, the federal agencies had budgets that they couldn't blow. So that was kind of the nice thing that really helped me. I wasn't working like on audits or tax seasons or anything like that, because that would have really hurt my ability to do this.
Do you remember having like that clear cutoff point where you're like, okay, like I can rip the Band-Aid off? Like you remember getting that wind of confidence where you're like, all right, this is it, and I can go do this?
Yeah, I do. I was at EY at the time, and I was billing all of my clients on a subscription model. So every month, I basically just tried to price out what the annual service would look like, divided it by 12. I didn't really know what I was doing at the time, but it was just, can I get some monthly cash flow coming in? And once that surpassed my day job income, I think it was like 8 or 9K a month or something. I got a lot of confidence at that point and really started looking for an exit. At that point, I then used my W-2 to qualify for a loan on a 3-unit property. I then moved into one of the units, rented out the other 2, and my living costs essentially went to nothing. The combination of the monthly subscription plus the living costs going to zero, it was basically like, why wouldn't we do this? It's a no-brainer at that point. There was no risk, no real risk.
You were married at the time?
Girlfriend, then fiance, then wife. So yeah,
Okay.
she's been with me since pretty much since the beginning. She ended up moving into the 3-unit with me. This is like probably about a 6 to 12 months after I'd moved in, much to the chagrin of of parents. But she moved in with me, and I charged her rent, and so I was like, hey, look, you can do this, but you got to pay me. So she still gives me crap about that today. Yeah.
That's awesome.
Yeah. Like, hey, as soon as we're like locked in, we can stop. But I don't know.
Yeah. You're like, I'm not there yet. That's funny. In those early days, aside from, so you ripped the Band-Aid off, early days, you answering questions on bigger pockets, helping folks out. Something that you've done a great job of is you've certainly doubled down on the personal content strategy, personal branding, and I think really kind of adopted the probably the new wave, right? Back in, we'll call it 2015, 2016, when you were kind of getting into this. When did you start kind of like getting, public with like a lot of that stuff, right? And being able to actually utilize it to help you build, your book of business? Because I got to imagine in the early days, like you can't just be blasting this stuff out there while, you've got your day job and everything. And so what did the client acquisition look like in the very early days versus what you kind of built to and what that progression looked like?
Yeah, so the client acquisition in the early days was just stealth mode on Bigger Pockets. I was just answering forum questions. I had one person reach out to me like a year or two later. They're like, "Oh, this is how you did it." Like they figured it out. But nobody's like paying attention to these online forums, so I wasn't really like worried about that. I did not go out and start any sort of marketing though until I'd quit at my job. So I had a podcast. I had that first Bigger Pockets podcast that you were talking about. I had that podcast lined up for September 2016, I think, and I quit like a week before. That was my last day. It was a week before that podcast. So
how'd you get it lined up? Was it because they saw you on the because Bigger Pockets was already pretty big at that time.
Yeah. So I'd answered a ton of forum questions, and then I reached out to them and I said, "Hey, you only have one CPA writing for your blog. It might be good to have a different opinion every once in a while, and I would love to contribute." And so they immediately threw me in. They were just like, "Yeah, 100% go." They added me to their back end, and you start writing and go.
You were like, you don't even have to pay me. I mean,
yeah, exactly. Yeah, it was awesome. And then I think it was a couple months of doing that, they reached out to me and they were like, we like your writing. Would you like to come on the podcast? And that was like the most nerve-wracking thing I've ever done. Because now like I can show up to these and just riff. I walk on stage and I'll like text my EA and be like, "Hey, what's the topic of this presentation again?" Like 5 minutes before it starts, and she's like, "You stress me out, dude." But like now I can just walk up and do it. But at the time, man, that was my first one, and I prepared for that for like a straight week. I like created all these cheat sheets and note cards and like everything. I was just trying to like, okay, I don't want to show up to this podcast and look dumb. So.
but leading up to it, did you have the thought that like, oh man, that like I'm gonna get a pretty big amount of distribution here? Did you set up like a lead channel then at that point? Like did you get a website up and content forms, all that?
So my website at the time was a 1-page, just if you're interested in consultation, here's a form to do it. And I did have that set up prior to the podcast because I was getting leads from Bigger Pockets. I was getting leads from the writing. They push it out in their newsletter as well. But when they signed me for the podcast, I started asking around and learned that you get a pretty big jump. So I had spent some time automating the web form on the back end, but I mean that podcast, man, I went from probably 3 to 5 leads a week to like 25 overnight a week. And today we do like 100 leads a week or something. But back then, that was just like, holy smokes, I have no idea how I'm supposed to handle all this business.
I gotta imagine, learn to, well, I mean, now, obviously, looking kind of where you were at the beginning to now, how many people you employ, you learned the leverage part of the business for sure, and you've been able to scale. What helped you do that?
What helped me do that? I laugh because I've made like every mistake in the book. Like every mistake in the book. You could probably start rifling off mistakes and be like, yep, I've made those. So what helped me was I just have this resilient approach to life. You know, I make mistakes, I get pushed down, and I look at, okay, it's kind of like just reviewing the game tape. I just don't think that I'm like good enough ever to stop reviewing the game tape. So I just always assess what went wrong, what can we change, how do we improve this next time. I don't believe that anything's perfect, much to the chagrin of some of the people that I've hired and no longer work at my company, because they'll create things that become their baby, and I'll start poking holes in it. It just drives them nuts. But that's just how I operate. Like, I just don't believe that anything's perfect. I believe everything can be improved, and I hold myself to that same standard. Probably the biggest mistake that I made early on that probably cost me years of growth is talking about that podcast. So I went to like 25 leads a week overnight, and my immediate reaction was, I need to hire a salesperson because I'll do the work, they do the sales. That was backwards, man. I should have hired, I didn't know it at the time, but if I were to do it all again, I should have hired $150,000 a year tax manager to do the work, and I will continue to do the sales, do the pricing, and all that. That's where it's just much more leverage that I would have had. But I went the other way, and I grinded through it for a long time before I really started figuring out how to put the pieces together, like I feel like I do now. So,
By the way, have you acquired any firms, or have you done everything organic?
everything's been organic to date. So we'll do. We're targeting $15 million this year, and we grow about 40 or so percent a year over year. But it's all organic. We are going to be looking at acquisitions though in the future.
I feel like our industry, it's funny. I look at this and I start telling myself now, I'm like, man, I feel so fortunate that I happened to study accounting when I did, got my CPA, right? Like, there's so much demand, as you know, right, for our services. Obviously, you could look at just like the statistics. I think, the whole AICPA thing they put out with the retirees hitting retirement age in 2019, not enough folks coming into it. We've certainly been the beneficiaries, I think, of being at a really great, being at a great place at a great, point in time. And so we have that demand, but the industry is also changing a lot. So, I mean, from the time that you were, in Big Four to like fast forward now, and even maybe the time that you started your firm, what do you think have been some of the biggest changes that you've seen in the industry, and some things that you've adopted and maybe stayed away from?
When I launched my firm back in 20 when I launched my firm, I guess, in 2016. But when I started my firm in 2015, I made a commitment to myself that I was going to be a remote firm. I was never going to have an office, because my goal was, as I mentioned earlier, to travel the world and be able to service my clients. That was my like big vision at the time. And interestingly, as I also mentioned, I haven't done any traveling, any serious traveling, but my team travels. They've got like RVs and they go to Europe and stuff like that. It's really cool. So I was totally cool with remote since day one. I just figured, why do you have to come into an office? Why do you have to track your time? Like, why do you have to do these things if what really matters is, did you get the deliverable to the client when they needed it by, and was it high quality? So how do you track those things instead? So I was always trying to figure out how to track those outputs rather than the inputs. And I think that I've seen especially post COVID, a lot of firms be way more willing to try to figure out how to make the remote work, how to make the production pay work. But the remote, the problem with remote work in accounting firms, larger accounting firms right now, is they don't know how to run remote teams. A lot of accountants are not very good leaders. They're not good at holding people accountable. They're not good at communicating. The best ones in any firm are typically like business developers. So they're not the ones that are managing the teams and delivering the client work. the best communicators, to be clear.
Yep.
Uh, so the question is, if you run a remote team and you're never seeing them face to face, do you know how to lead and how to manage and how to hold those people accountable? And can you do it? And what I've seen is just a lot of firms just don't know how to do that. So what they say is remote workers are less productive. We have to do a return to office, but what they're not, the elephant in the room is just that they're just not good at leading people. And if they fix that problem, I promise you the remote thing would work. So we've seen a lot of firms try remote. We've helped some firms with figuring that out, but a lot of times remote fails because they don't know how to lead the remote teams, and so you end up with this, like, what is it, proximity bias, I think, where, like, if you and I are in the office together every single day, I'm going to have this proximity bias. I'm going to assume that you are better even if there's a remote employee outperforming you, simply because I see you every day. We go to lunch, we go to coffee. So I think a lot of firms just aren't realizing that, and their remote employees kind of get left out in the cold. But for our firm, we've been 100% remote since day one. A lot of challenges, but a lot of success with it. Um, and then the last thing that I'm seeing is just more of a. I'm seeing two more things, but the second to last thing is a stronger shift to that value pricing model. I don't think value pricing, as it was originally created, is very scalable, but I do think that you can find ways to price the relationship with like a fixed fee tiered pricing model. And we're seeing a lot of firms, even larger firms, start to play around with that, which is kind of cool. And I think that's really important because I think that over the coming years, as AI really gets more embedded into firms, your deliverables are going to be produced almost instantaneously, and maybe not like in 3 years, maybe not in 5 years, but probably within 10 years. Like, imagine being able to just like collect the information from your client and then structure it correctly for your AI agent, press go, and now you have, an like, 60 seconds later, you have a really complex tax return that is done for and ready for your review.
Yep.
So if the world moves that way, what happens to billable hours? They kind of there's no hours to bill. There's no work, right?
Right.
From a traditional perspective, though. So I think you'll see more firms try to figure out how to price that relationship and nurture relationships. But then the last thing is just the acquisitive growth from private equity companies, and just giving other firms the confidence that that is a great way to grow, and that's been really interesting to watch too.
I think part of it is even seeing that you did it, because I've heard you talk about it before, getting away from the hourly billing model. I remember with one of my partners, I'm like, we're definitely not doing this. And not just because I don't want to, I hated doing it. I don't want to track my hours. I'm not making anybody doing it. Screw this. We're not doing this. There is a way around it. We need to be focused on the right things, not tracking hours. And we started all remote also. So definitely that resonates. But what's interesting though is that when you talk about the like what other firms are bad at in terms of not being able to execute on the remote work stuff, it comes back to leadership and kind of what, like, focusing on the wrong things and really just like developing people. So what, like, how do you look at that and like developing people? And one of the things that, like, you hit on certainly resonates. I took a different approach in the beginning for sure, but like with the whole, still don't really have, I would say, like formal BD, right? But like you were the owner. I think you learned pretty quick. You're just like, well, this is my baby. This is my brand. I'm going to be the best one at selling it because I know it that well, right? But that's also to have somebody that can execute on the product and be able to sell that product is such a valuable thing. How do you train for that? And how do you, like, have you started to put together a model or strategic points for actually doing that and to like develop people into that?
So yes, we have, and we are formalizing it more and more every day. So now I have one of my partners is our VP of talent, and her job is to essentially go through, make sure everybody's got goals, make sure they understand why they have goals, why it's important, and then understand what their career paths look like and how they're progressing. So we have formalized it. and we're continuing to formalize it. But that said, what helped me was like I feel like I have decades of leadership experience, and I'm 34 years old. And the reason that I say that is, like I said, I made every mistake in the book, and I would not have had that opportunity to make all those mistakes had I stayed at EY or at PwC, because they've got everything figured out. They've got the systems in place. Like there's not a whole lot of ways to make mistakes that like super learnable mistakes and things like that. At least not at the scale and the quickness that I did launching my own business. And so the real question for us that we've been exploring is, how do you enable other people in our firm to make those mistakes faster and learn from them and get coached on them? Because that's what it is. I mean, it's a very simple example is if you and I are having a one-on-one today, and you're like, all right, Brandon, I need this deliverable by the end of next week. How often have we heard that? And I'm like, okay, that sounds great. We part ways, and in my mind, I'm not going to start working on the deliverable until Thursday, because you said end of next week, which to me means Friday close of business. But in your mind, you want Friday to review the deliverable before the weekend. So you really need it by Friday 9 a.m. on your desk. So Friday 9 a.m. comes around, we've got a problem, right? And it's a really silly, simple example, but that lack of clarity, the lack of communication, the lack of expectation setting, it proliferates into the entire firm, and we see it all over the place. I coach some firm owners from time to time, and it's the same thing. It's like, well, my tax team really stunk this year. Well, why did they stink? What happened? Well, they didn't get all the stuff done by the deadline. Oh man, you guys didn't get to file all your returns by the deadline. You got some returns left over. Oh no, we got it all done. I'm like, oh, well, so what was the expectation you set then? Well, it's just to get it all done by the deadline. And you weren't happy with that? Well, no, I wanted it done 2 weeks before the deadline. Did you tell him that? No, I didn't tell him that. Okay, well, is it your team or is it you, right? Like, that's what I mean. These are simple examples to illustrate that accountants in general just aren't naturally and I would say not even just accountants, just anybody. You don't think that you have to be crystal clear. You actually think that the more clear that you are, the more of an a-hole you're being. Like, some people think, well, if I tell you I need it by Monday at 10 a.m., that's going to come off weird and I'm going to be viewed as an a-hole. But the way that I approach it is clarity is kindness. It's the kindest thing that you can do, to be extremely clear. Unclear is unkind. You got to beat around the bush. You're not helping anybody. But that's the main problem, is just training people how to get comfortable communicating clearly, and then what real accountability looks like. Like, real accountability is not, sitting on the status meeting and yelling at your team and telling them all to work harder. And that's what people think accountability is. That's a part of accountability, is the status meetings and helping people prioritize and reprioritize. But real accountability too is like picking up a low level task for you to make sure it was done correctly. Because when your team sees you do that, they're going to make sure that their work is good and timely in most cases, because they don't want you picking up their work
Yeah.
and finding out that you've been making a mistake or they've been making mistakes. So I'm kind of like going on a tangent here, but it's very hard to train, very hard to get accountants thinking strategically, seeing the future, like what's coming down the pipeline 60, 90 days from now, and what do you need to delegate today, and how do you delegate? A lot of accountants too think linearly, like, well, I can't give this task to this person because they are a new manager, and I've got a more experienced manager or a senior manager, so they get first dibs. But for me, I'm like, I don't care. I want people that have good attitudes. I want to surround myself with people that have good attitudes, that want to do the work. They raise their hand, and then it just comes back to, you got to be willing to let them fail, right? I'll give them the harder projects. They'll get 80% of the way there, and that's okay with me. And then we all learn in the process, and I high five them and we move on. But yeah, it's just kind of a different way of thinking.
Yeah, it's so funny too, because it's like, I feel like for me, I don't know how that's been for you, but I feel like accounting in general, understanding it, studying it, and everything was the thing that helped me understand the bigger picture from a overall business perspective. And then, I mean, that rolled into real estate investing, forecasting, just other things that you're interested in looking at, because I do just gravitate to really enjoying business and business development. But so many accountants, for whatever reason, I look at it as like, I'm like, man, accounting is one of the greatest things that ever happened to me because of the perspective that I have. I think there's other things probably within, our personalities or, or whatever that complement the accounting perspective well. But so many accountants that I work with, they're linear thinkers, especially in the sense that they're also just very task oriented and not looking at the bigger picture of things. And you're like, well, you're an accountant, you understand the numbers so well, right? Like that's kind of, what I would say a lot of people from the outside looking in would say.
Real quick comment on that. We do disc surveys
Mm-hmm.
with all of our people at the firm, and we have a disc wheel. So it's basically like a personality survey, but it's kind of creepy accurate. Anyway, so we've got this disc wheel, and probably 90% of my firm is in like one little quadrant. Everybody's plotted in one little quadrant, and that quadrant is analytical, likes steadiness, conflict averse, let's just like calm, wants to show up, do their thing, then be done. And then myself and my COO, we are literally the exact opposite of those, So it's like this. We have conflict in our firm because we'll come in like hard charging, and then everybody else is like, "Whoa, this is not steady. I want steady, right?" But I think too that's what you want out of accountants too. Like at the end of the day, you want people that are very detail oriented. You want the people that spend 2 hours trying to tie out the penny because that's what you're hiring them for. The question is, can a great accountant become a great leader? And when people hit their career ceilings, it's typically because they're not making that shift. They think that I have to do more of what got me here, meaning that I now have to work 60 hours, 70 hours, 80 hours a week to bill more time and to be up for the director role or the partner role. When in reality, you have to make a shift at some point in your career to getting results through people, not through yourself. And if you can't make that shift, it's not a bad thing. Like we have people in our firm that just want to be on the technical path. They don't want to manage people. And frankly, I very much appreciate how open and honest they are because then we can figure out a path for them. And we would love
Yeah.
to keep them because they're brilliant. Like we have
Yeah.
brilliant people at our firm, but it's the issue is when you have somebody that's a great accountant and they want to keep leveling up and they can't because they don't understand how to make that shift to I have to get results through people now. That's my leverage point. It's not how many hours I can bill. It's not how many tax court cases I can read and decipher. That's not my leverage point. My leverage point is the people that work for me and under me, and how do I corral them and give them a mission and motivate them and drive the result.
There's a huge wave of people. One of the things that we touched on is obviously like so much demand in accounting and accounting firms, and we see it on Twitter. There's this huge, I think the growing popularity of people that they're like, oh, I want to invest in an accounting firm, or I'm going to start an accounting firm. They're not accountants. They don't come from accounting backgrounds. That's not to say there aren't any out there that haven't executed very well on this. I had Patrick Dichter on last year. It was great chatting with him over at Apple Tree. It seems like he's doing a great job over there. And so, there's one example. But I think there's a lot of things that, people get wrong, or at least things that I'm seeing that maybe it's just simply that they think it's easier than it actually needs to be. I don't know what it is, but from where you sit in some of the conversation that you're seeing of so many people wanting to come into it, why is it a bad idea if you don't have, what are the things that you could potentially be missing, or that you're not aware of, that are going to make you fail when you're trying to get into this business, maybe start an accounting firm, and you don't have the first clue on kind of where to start?
Yeah, I think the first thing to understand is that in most firms, the partner owns the relationship with the client, meaning that the client will stick with the partner no matter where the partner goes. And I think that the biggest challenge and the first thing that you want to do if you're acquiring an accounting firm is to figure out how to shift the client relationships from being partner central to firm centric, right? Like you want the clients to have a relationship with the firm and with the platform that you're building, and they're being serviced by this great person. But if that great person leaves, you're not going to lose the client as well. So that's probably the biggest risk, is that you misunderstand how sticky those client relationships are, um, and you don't set that when you're acquiring a firm. You don't set the acquired partners up for success. Like, they're not understanding your long term vision, so they might bounce out of the firm and take those clients with them, or not even take the clients with them, but the clients are like, I don't want to be here anymore because I'm going to go find somewhere else to work. That's
Right.
probably the biggest thing. I think non-accountants coming into the accounting industry is actually a good thing.
I agree.
And I know that might not be like kosher to say, but I think it's a good thing for a couple of reasons. One, I think that it's going to force accountants to learn how to run real businesses, not just have jobs, like
Yeah.
high paying jobs, but it's still just a job, right?
Yeah.
Work until I'm 55 and then have some retirement buyout calculation. It's gonna force accountants to run real businesses, which means that equity value is going to be real. And what I mean there is, a lot of traditional firms, you get to that retirement buyout age, you retire, and your buyout is a formula based on your prior 5 years of income. They average the 5 years, but they throw out the top year and the bottom year. So the middle 3 years they average, and then they apply some multiple to it. So your equity is worth nothing essentially. But I think we'll start seeing like legit accounting businesses, just from this like outsider perspective, just being able to bring better business knowledge on how to run platforms and build platforms. But I also think that outsiders coming in is good, because it gives real value. It creates a marketplace for firms
The
that wasn't
competition's
really there
good.
prior.
The
Yeah, I mean
yeah.
the option previously, prior, like 2016, 17, I think. 2018 was when private equity kind of started looking. But prior to that, the option was to roll up, merge up into a firm and work until you turn 55 and retire. Like that.
Yeah.
That's your exit option. And today you can sell your firm like that. So
More competition, more demand. That's only going to increase. A part of me also wonders, at the valuations that you're seeing some of these PE buyouts happen, right? Look, like private equity, they got one job: make money for their for their clients, for their capital, right? And it does make me wonder what the future looks like. We'll call it 5 to 10 years, on when these guys are going to be ultimately exiting, because a part of me feels like, hey, I don't know if you have any other buyers other than going public and changing these partnership models.
I think you'll have buyers for a long time.
Yeah.
I think even the really large revenue aggregators will have buyers for a very long time, like decades. I don't think this is going anywhere. There's always a bigger fish that's willing to pay a premium to not have to go and put all the revenue together and all the systems together. Like we just saw, I think it was Citron Cooperman. They were the first one just a couple weeks ago that sold their private equity firm that was invested in them, sold their stake to the next private equity company. And I think you're going to see a lot of I don't know how to quantify a lot, but quite a few, several of the private equity to private equity transactions over the next 18 to 24 months, and we'll kind of see how it goes from there. But it's definitely, you're correct. Private equity, they will get their money one way or the other.
Yeah.
That's what they want. That's what they care about,
That's what they do.
and that could be potentially a downside for the industry. Like we're not going to necessarily make the right investments into technology and into people that we otherwise would. But I also think that there's pros and cons with that. There's pros and cons.
One of the things that I know is sensitive to the bigger firms. I would say it's probably sensitive, or more sensitive to larger corporate environments. Something that is new, I would say, to our generation, something we touched on briefly, is the content creation aspect, right? Something you've doubled down on well. You've got a few guys that are doing a great job for you. You've got, they're out there on YouTube, putting videos out. They're whether it's on IG, TikTok, whatever. How big of a role does content creation play for, I would really say, just service businesses in general in today's day and age?
Oh, I think it's huge. I mean, I think we would all agree that people buy from people and not companies 99 times out of 100, especially in professional services. You're buying from the people that you know, like, and trust. Now, if we think about what it used to look like, all right, it was the business development, the partners, the senior managers that are up for partner, They would go to networking events. They would try to build relationships, and they would try to bring those relationships into the firm so they could bill them for the services. This is the same thing. It's just the distribution is ginormous. It's the same thing, right? It's like, what am I going to do? I'm going to go and have coffee with a business owner, and we're going to talk about their business and the pain points, and I'm going to give them some ideas. Well, that could be a conversation. That could be a podcast. That could be an X article, LinkedIn article, Instagram. It could be on my blog. And now, like 5,000 people are going to see that. And so I've turned this hour that I spent with one business owner into an opportunity for 5,000 business owners to call me, and five might, right? So that it's not so much I think people overthink it. I think accountants especially overthink it. It's like, oh, I have to be an influencer, and you don't have to be an influencer. You really don't. You don't have to you don't have to go viral. You don't have to do any of that stuff. All you have to do is think about, how would I get business otherwise? And those things, those conversations, those topics, I can probably just post about or talk about online, get a much wider reach, and create an audience a little bit more passively than I would have to otherwise. You'll definitely speed up the time to buy, or the time to curate that audience versus like in-person events and like the more traditional business networking. But I will say it's even the people that like me, where you've created this great brand and it's recognizable, like you reach points of scale where that organic growth starts like dropping off relative to the size of your firm.
Right.
And so that's something we're trying to figure out right now, is how do you get more people involved in it if they want to be involved in it, or do you do some sort of paid acquisition, or like ads and stuff like that? So it does work. It works really well. You can build a really strong book of business. Like if your goal is to build a $5 million book of business, you should be out there on social media as often as possible. Find the platform that you like the most. Some people love creating videos. Some people love creating shorts. Some people hate videos, but they love writing. Figure out what it is for you and start putting your name out there, because that's how you attract clients. That's how you become this like magnet for people that want to come, that need help, need accounting help.
Yeah. I'll tell you too, just in my experience, I really just got active on social media really just about a year ago. And I mean, look, I don't have any kind of crazy following. I've definitely have more people that I've engaged with over the year as a result of committing to like, hey, I'm going to put some stuff out there. Right. And
including Mark, what?
Oh, Mark Cuban.
Yeah, Mark Cuban. Yeah.
Yes.
That was crazy.
I got a huge retweet from him. Got a ton of views. That was great. I was actually, it's funny. I was traveling that day, and I got off the plane, and my phone was off. I opened it up, and I was like, "What is going on?" I looked at it. Whoa! I was like, more notifications than I've ever seen. But look, I mean, it's so true. You don't have to have a huge following. I certainly don't. I'm kind of new in the social media game, and man, the amount of relationships that I've built, and it really has been wonderful. I mean, there's so many great people too on X, at least for me, that I've engaged with, and even on LinkedIn too, that I would have otherwise never have engaged with had I not kind of put myself out there. People just need to know what you do, even if you're not providing any value at the beginning, right? Of great content that you're putting out there. Just knowing what you do opens up doors. And try to encourage. There's a lot of people that I've talked to that they're thinking about it and stuff. And I tell them too, in my journey, I'm like, man, it was so awkward for me. I was like, oh man, I remember that first time that I like put something out there. I was like, oh man, this feels so cringe. It feels so weird. But now it's natural.
Yeah.
So
yeah. Don't overthink it. You just start putting it out there. You'll eventually have 1,000 pieces of content out there, and nobody will remember the weird thing that you said that one time ago. Nobody will remember. It'll be totally fine. Exactly. But you also made a good point too. Like you don't even have to necessarily talk about taxes or auditing or whatever. Like you just have to put in your bio who you help. Like I help real estate investors save money on taxes. And then I could just talk about if I live like a cool life. Like I've got a group that I run of firm owners, and one of them skis a lot. And I was like, you could just start talking about that, right? Like, because people, like, I bet you got cool photos. You probably have really cool videos. You could probably talk about how awesome the powder was, or the POW, whatever the term is, and you'll get followers just from that, and then they'll see, oh, you're a tax accountant, and the right ones
Right.
will come right in. So
Yep.
people follow people. You don't have to like necessarily put yourself out there in a technical capacity. Just be you, like build
Yep.
your personal brand.
100%. So I know we got to wrap up here in just a minute. I do have one more kind of big one. Obviously, we've got new administration. You're a real estate investor. People are always wanting to know what the heck's going to happen, right? So how do you think Trump being elected as president is going to affect the real estate market? And what do you think is coming by way of any kind of tax code changes? We'll call it, to the extent that there are any.
It's a great question. I think that the real estate market, I don't know. I don't know what's going to happen with the real estate market. I will tell you, a great guy to follow is Logan Motashami on Twitter. This is Logan Motashami. He's an economist for the Housing Wire. He's on their podcast, Housing Wire Daily. He's a very data-driven guy, very objective, doesn't take sides. I've really enjoyed following him from a what's going to happen to the housing market perspective. I think rates are obviously the hot topic of conversation. I know that Trump is going to recently said that he's going to tell the Fed to lower rates, but what the Fed does doesn't necessarily mean that the 10-year Treasury is going to be reduced. Like that, you could reduce rates and the 10-year is still going to increase potentially. So it kind of depends on what's going on a more macro level. So I don't know what's going to happen. I hope that it's all perfect, right? That'll be great. Low interest rate environment, get 100% bonus depreciation back in action. Man, our firm will be ripping. But but I don't know. I do think we'll see some tax legislation though by the end of this year, if not by middle of the year. And I do think that you'll see 100% bonus depreciation added back. It's a bipartisan pro-growth tax policy.
I don't know if we'll ever see kind of what we've been the beneficiaries of in the last cycle. I hope we see it again in our lifetime for sure. I know for me, and I know certainly for you, I'm sure, huge beneficiary of that cycle. So hopefully we see it again in our lifetime.
If you ever see interest rates below 3%, buy everything in sight. That's the one thing I've learned.
Yeah. And you probably didn't have that perspective when you got into your first one.
No, I know. Yeah. No, I was like, all my first properties, like they've got these great interest rates, and I was like slow and timid and didn't know what I was doing. In retrospect, like we've got a couple clients that just leverage to the tilt on these like 2.5% loans, and man, they've got private jets, and they crushed it.
Yeah. All right, well, Brandon, before we wrap, is there anything else you'd like to share, and maybe where's the best place for people to find you?
Best place to find me is for accountants. The best place to find me is on X or LinkedIn. So I'm at Hall CPA on X, and I don't know what I am on LinkedIn, but if you search Brandon Hall CPA, you'll probably find me. I write a weekly newsletter for firm owners and accountants, just accountants in more like leadership positions in their firms. That goes out every Saturday, and you can find the sign up on LinkedIn. So if you go to my LinkedIn, you'll see the sign up for that newsletter. But I'd love to have you on the newsletter, just trying to share what works and what doesn't work as I experience it personally. So
Awesome. Well, man, thanks for coming on, especially at a busy time of the year. And we'll talk soon.
Thanks for having me.
Thanks for tuning in to this episode of the Roads and Riches podcast. If you're enjoying the show, please consider liking, subscribing, commenting. Let us know how we're doing. And if you're an individual or a business that's in need of accounting services, maybe you're in the market for a new CPA, whether it be tax, accounting, fractional CFO services for your business, or transaction advisory services if you're contemplating a transaction, you should consider using Alpine Mar, the CPA firm that's redefining the accounting industry. You can head on over to alpinemar.com or roadsandriches.com to learn more about us and find a contact form to get in touch. Find out if we can be a good fit for you. We'll see you next time on the Roads and Riches pod.